Hey traders, John Howell here, and in today's video, I'm going to be covering the stock market, a bit of a stock market update. Also, silver and gold. Silver actually had a bit of a pullback today. What does it mean? And what's likely to happen moving forward? Also, I'll be covering the gold mining stocks, a bit of an update on there. I'm getting really excited about the gold mining stocks. I'm also going to be covering JNUG. I know a lot of people like JNUG, so I'll be covering that as well. And when it comes to the JNUG and all these other things as well too, I'm going to be talking about the biggest bubble that that is likely to come out of what's likely to happen over this next decade. If we're looking at like the next big short type thing, what is the biggest bubble out there and things that you should be careful of when investing your money. And lastly, why I see $110 oil. I'm going to give you a bit of an oil update and why I see technically that it if we do start to see a breakout, then we could actually start to see $110 oil. So we have a lot of stuff we want to get through, so let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, if you haven't done so, go to johnsflashsale.com to get the $7 trading course where you can learn the deadly mistakes, 10K per month plan, charting boundaries, amazing chart reading techniques, ultimate trading system, blast off trading system, #1 indicator, principles, and so much more just for $7 here. And I've gotten so much good feedback. If you have bought the $7 course and you got good feedback about it, leave a comment below and let me know what you liked about this. I'm doing this just to really help you get a good foot in the door in trading there. So that's what I want to share with you there. Let's actually start into today's coaching and today's training here. And one thing I want to share with you first is let's actually go through the Dow Jones here. Now the Dow Jones has had a bit of a pullback today. I don't see this as the end of this move yet. I still see we're probably going to have a little bit more upside. We see that the Dow Jones here is very close towards let's bring up say the 3-month view. There we go. We're getting very close towards the target that I have here for 29.50. So I believe we're probably likely to see that little last push before we start to see a correction. But a correction is coming. Correction is just around the corner. You look at the S&P 500, it's almost at my major long-term resistance level. Now, by the way, guys, this is a long-term monthly trend line that's going back, and it goes back all the way back to 2009 it starts. So this is actually a very valid trend line that we're probably likely to run up and hit, and then likely to see some sort of pullback. But just be aware, guys, over the next month, we're probably likely to see a sharp pullback out of this, okay? And even the Nasdaq is just on fire right now. And it's just, if I squeeze my chart up, look at this here. Look at that, that's just, oh, wow. Right, so our correction is just around the corner, and get ready for it. That's all I say. Get ready. Now, that's the first thing that I want to talk about there. The next thing I want to talk about is silver and gold. What's going on with silver and gold? We had a bit of a pullback here with silver there, and silver and gold. So let's actually have a look at the gold price first. First thing about the gold price is that we just had a little bit of a sell-off today and a little bit there. Nothing really going on. We're still in this, we're still getting this very weak buying period, which to me spells, a very weak selling period, which now spells to me a good buying period coming very shortly. And we can see through here that we have this strong buyers, weak sellers. We're probably likely to see strong buyers out of this here as well too. And it's interesting, this is all setting up in gold right now and also silver. But it's setting up right now as we're probably getting ready for that correction coming real soon. We never know exactly when the correction is going to happen, but it's interesting to see that gold is setting up to have a nice bullish move as we're probably getting towards that point where the correction is probably likely to happen soon. And then even with the silver, now the silver price actually had a bit of a sell-off, right? A bit of a sell-off here today. What does that mean? Absolutely nothing, right? Absolutely nothing. The exact same thing with gold and silver. Look what happened here, right? We had this big, strong buying period through here. And now we're getting what? Now we're just getting this very weak sort of overall pullback through here. Once again, strong buyers, weak sellers. We're breaking out of this level through here, right? We have this resistance level here. So I see some sort of major higher low through here with silver. If I bring up my Fibonacci levels, then as you can see, right, that 50% level there is holding it strong right now. So I definitely see This thing holding and now continuing up for there. And the same for the SLV price, right? We can see here on a short-term basis, that's actually the long-term Fibonacci, but if you look at the short-term Fibonacci, you'll be able to see how that it actually did run down today, didn't it? Look at it. It came down today, still at that 30% level there. So even if we've got a bit more of a pullback, you can see this, what I call like the strength in the move. And let me see if I can bring this one up here. All right, cool. Yep, all right, cool. That's what I actually, you know what? Let's go to that one there. Okay, cool. Just with my one moving average here. And as we can see, right, with this one here, we've got this strong move up. But look at this here, right? This is the psychology of trading, right? We have this strong move up, very, very strong move up. And then we have this very, very, very weak pullback here. Notice how the psychology, right? If you look at the box, because that's all the market really is, right? Buyers and sellers. And the market gives you a representation of the strength in those. So notice how we had this very strong move up. Look at the angle of that and look at the angle of this. Notice how the angle is so much more vertical, or so much more of a strength on up and not much of a strength on down. That means we have strong buyers. And when this has gone through a weak selling period, this is known as price. The market's making price, which is now using energy. The market's now, this is known as time, which is now just building, just going sideways, not much going on. So I'm expecting very, very soon a breakout soon, and probably a run back up towards these levels here. So I'm prepared for it, and I'm getting really, 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 really excited about that there within this trading here. Now, guys, remember, guys, don't just jump straight into silver and gold because you think it's a good idea. Make sure that you have a good plan, have a good approach within your trading there. I'm running a webinar today, guys. If you'd like to learn how I trade the markets, my trading strategy, and so much more, and also a bit of a dark past in my dark past, go to johnslivetrading.com, johnslivetrading.com, and you'll be able to join my webinar I'm running today. And you're going to learn all the details about my dark past and how I went from $250,000 to trading. Or you're going to learn all the details to my trading strategy, how I trade 1 hour per day, scanning, and so much more. You're going to absolutely love it. johnslivetrading.com. Now let's go and have a look at the next thing I want to talk about is gold mining stocks. One of the stocks that I'm looking at here is I'm getting really, really excited long term is GDX. I think GDX is gonna be the thing that just goes on absolutely Burko mode, very like we're talking about over the next say 5 years, right? And if we look at this weekly chart, if I squeeze this weekly chart, look at this here. Once we start to break above, we're still look at this massive base through here. Oh my goodness, guys. This is, forget the big short, forget the next biggest bubble. Why don't we jump on the next big boom, right? It's like, this is right in front of our face. There is so much of a high probability of what we're likely to see here in the GDXJ here in the gold mining junior stocks. Now that's not a blatant statement across every single junior stock, because junior stocks, some of the junior stocks may do really well. Some of them may do really bad. Some of them may just do okay. What I'm talking about here is specifically designed to the GDXJ only, okay, because it's the chart I'm reading here, and the chart is telling me we have had all this sideways movement. When we break, think about sideways as an energy field, and the longer it goes sideways, the more energy it builds up. So when we break, we're releasing that energy, and guess what? Pachoo! That's the sound effects that gold and that the GDXJ is probably going to do, right? Pachoo! I love it. It's just, guys, when you start to trade the market for quite some time and you start to really, really read these charts, you start to get you can start to see these patterns happen again and again and again. People have asked me, John, how did you predict with the S&P 500 to have, for its projection? If you guys remember about my projection there, right? How did I get that? How did I pick up JP Morgan and have a target of it moving? How did I pick up Goldman Sachs and Tesla as well too? Like, people have asked me, John, how do you get involved? Like, how do you analyze that? And it's all coming really, really, really from the chart. And the better you can read the chart, the better trader you'll be. And obviously with that $7 trading course, guys, I walk through 3 powerful chart reading techniques that get you started on the right foot with that. So that's what I'm saying there right now. But the GDXJ, guys, all in all, on a short-term basis, we're actually now building up a bit of an ascending triangle pattern. It's squeezing up and squeezing up and squeezing up right now. Once we break this level, guys, oh my goodness. Bing, 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 bong, 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 bong. It's on. Hey, that rhymes. Cool. Now let's move on to the JNUG. Okay, so JNUG here. What do we have for JNUG? JNUG here is one of those things that's pretty much just going along with, obviously, the junior miner stocks, right? Actually, no. This is supposed to be the directional gold mining. So this is the for the GDX. This is going in line with the GDX here. I think we're probably like to see some really nice movement out of this here. Yeah, so probably like to see that. I'd really want to see a break above the 100 level here with that there. Once we see that there, we're probably going to have a nice move up to around the 250. Once it breaks the 250, it's pretty much game on to about the 600 or 650 there. So really excited with that there, guys, about what's going to happen there with the JNUG. Now, with the JNUG, and I talked about the biggest bubble is coming around, the biggest bubble. I believe, and not only do I believe, but let me just bring this up through here. Right. We can see here, right? This is the article that the Big Short Michael Berry explains why index funds are like subprime CDOs. Basically the next biggest bubble, and why he thinks that. Here's the thing. If you read more into that, I believe that the really big ETFs, such as the SPY, QQQ, GLD, the GDXJ, and so some of those main ones, those really big ones, I believe they're going to be safe. But everything else, such as the JNUG, such as all these other 3X and 2X and all this sort of stuff, guys, doesn't it make sense to you that this is a recipe for disaster overall? Like, to me, I'm thinking, how can they have so many ETFs? It's like it just doesn't make sense to me, right? On a logical point of view, it doesn't make sense to me how they can have that. Now, I can understand how they may have, the gold, right? GLD, it tracks the actual gold price. I understand that. The GDX Juniors is a basket of what? The junior stocks on average. I understand that. The SPY, same thing. But one thing I don't understand, and what makes me question me investing, which I don't invest anymore into JNUG and all these other 2X and 3X ETFs anymore, is for that reason. Once we start to really start to shape up into our next recession, which we know it's going to happen in the next year or two, once we start to go through that, to me, logically, it doesn't make sense that these really big ETFs, like, I don't know, I just can't see logically how they're funded, and all that sort of stuff. So if you are investing big money into these 2X and 3X and not the main ones, you really need to be careful with that there. And that's the reason why, for me personally, when I'm investing my money, it's in SLV, it's in GLD, it's in SPY, it's these types of main big ETFs there, and they're probably likely to be safe. But everything else, it's just the biggest bubble, as Michael Berry says. But when I look at it from a logical point of view, I'm thinking, this doesn't seem right. Like, how can we continue investing in all this sort of stuff here? So, what do you guys think in the chat box below? What do you guys think that's going to happen here when it comes to the ETFs? Michael Burry said that last year. And as you know, Michael Burry is generally between 2 to 3 years early. Or he was in the Big Short. 2005 was when he started placing the bets, when he started seeing the fundamental crack. And that's the reason why you shouldn't trade the fundamental. Because even though the fundamental crack started happening in 2005 and 2006, guess what? It wasn't until 2008 that we're actually in the middle of the crisis. So that's why we should never trade a fundamental. Never trade a fundamental. Because even though fundamentally it may be bad, even though fundamentally your only thing you can really rely on is the chart itself. If you're trying to trade, now I'm not investing really long term, investing over a 5 year period, that's different, right? But if you're trying to trade, you're getting in right now, holding it for a few days or for a few weeks or for a few months, you cannot trade a fundamental, right? You just cannot trade that. Focus on the charts itself, right? And there's a lot of things you can do. And again, in that trading course, at johnsflashsale.com, you'll be able to see all the details to some of the most powerful stuff out there. And even if you don't want to do that, guys, like go to my channel here and go through the trading education. You go through that. There's a whole bunch of stuff there to help you out as well too, right? I didn't care. I didn't even really care if you don't invest with me, guys. All I care about is get the help you need. That's it, right? And so that's what I'm seeing through there. And the last thing, guys, is the oil price. Why I see $110 oil through here. And we can see through here, right? This is the weekly chart here. And if I bring up my long-term monthlies, this is the monthly layer. Look at this monthly long-term triangle pattern. Just massive, massive, massive triangle pattern. And we've been squeezing up. But look at this here. It's pretty much gone sideways here right now for 3 years, right? 3 years, this has done nothing. Right? Now, remember what I said before, when the market does nothing, think about that like an energy field. And when it breaks, we're now likely to go for a big run. Look back here, right? Look back here. We had a nice sort of ascending triangle pattern, right? But guess what? If we just bring it back to what I was just saying before, we had all this sideways movement, right? Then once we started to break, it actually broke quite hard. And then we actually eventually ended back down towards these levels through here. So once we start, now this is a monthly chart, by the way, guys, right? So once we start to break above here, that's why I see that we've got all this energy. And once we break, we're likely to release the energy. And that's where we're probably likely to start to see a move back up to 110 through there. Make sense, guys? So think about the market as an energy field. When you start to see the market go sideways and it doesn't do anything, it's building and building and building and building and building energy, okay? Then when we start to get a break, it's now likely to release that energy and we're likely to see a very, very nice move. That's the reason why when we're looking at long-term picture, such as say, even like if I bring up say the SLV, look at this SLV. Let's actually go to the weekly chart, even just the weekly chart. Let's bring up everything up the screen. Look at this weekly chart here. Right, look at this here. We've pretty much done nothing for what? What is this here? We've pretty much done nothing for over 5 years. So what do you think is going to happen once we definitely start to break up and above these levels through here, especially above this 20 level? What do you think is going to happen long term? Right, we've got all this energy that it's been building for all this time. Once we start to break, guess what? We're going to see Bitcoin action. Why? Because this time phase, aka known as an energy building phase, the longer it goes, the more energy it has. So when we start to break through here, we're likely to go for a big run. Now, a big run, guys, does not mean straight up. Like if you think the market to go straight up like that, it's not likely going to happen through there. What's likely to happen is we go for a big run for 2 or 3 or 4 months, right? And then we have a month or two pullback. And then we go for another big run. And then we might have a sideways period. And then we go for another big run. Right? That's what we're probably likely to expect in any big bull market, because remember, we're looking at the weekly chart here. So every single one of these little dots you can see on the screen right now, that's a 5-day trading period, 7-day week period, right? So things do take time, but when we're looking at this now has 5 to 6 years. I just double check that again. Yeah, over 5 years, I would expect, even if we get some vertical action out of this here, I would expect at least 1 to 2 years of strong action. If it's not strong, well, then I could expect 3 to 4 years of action. So when we start to break, we're probably likely to see 2 different things. If we break strong like this here, and we start to see a move, this here could be 1 to 2 year period. If we don't see that, but we just get like a very slow bull market, where it runs up a little bit and does that little for a bit and it does this little bit and, you know, sort of something like that, where it's not really strong, well, this could be 2 to 4 years worth of a bull market, depending on how vertical it is. Because remember, when the market goes vertical like that, and say this is over, say, 2 year period or a 1 year period, it's using a lot of energy really, really, really quickly, right? Think about that when you gym. right? Think about that as a gym, right? If you go to if you have a lot of energy there, but if you go to the gym and you just go hammer and tongue really, really quickly, guess what? You're using a lot of energy really, really, really quickly, right? So that's the reason why if the market goes up really quickly, you've only got maybe 1 to 2 years of a big bull market, but very, very, very rapid price action. If it's a slow bull market and it doesn't have that sort of big move, then we're probably going to have a 2 to 4 year bull market out of the SLV, the GLD, and stuff like that. So I hope that makes sense. Remember, energy building is such a massive thing in my trading, and I use this when I'm using this when I'm looking at, say, things like Tesla, JP Morgan, Goldman Sachs, these other things that I've called correctly, and it's actually ran straight to my projection level. And even with my private clients, right, there's actually a couple of more long-term plays that I'm looking at right now that exactly like that. And I've talked about that with my private clients as well too. Absolutely amazing, right? There's so many amazing things that's happening right now. But the whole point here, guys, is not just to give you the fish, right? People want me to tell them exactly when to get in and exactly when to get out. Guys, take this and use your education, right? And start to apply this and start to get really, really good at this. And when you start to understand this one technique, it can start to change the way you look at the markets, and you will know whether this has a very, very, very long move right now, or whether we're probably likely to go for a short market there. I got into a trade just recently, and I'm not going to mention what it is. It's my private clients know what it is, but it had 2 years of sideways movement. 2 years, right? 2 years of sideways movement, and now guess what? The chart that actually, you know what? Let me just bring this up here. I'll bring this. This is the screenshot here that this is the screenshot here that I just shared with my private clients, right? So the same sort of thing here. This is actually a trade that I got in today. Now this is a long-term trade, but the same sort of thing, right? Look at this here. Over 2 years of time, aka energy. This is a monthly chart, and we've got a big breakout here today. So if we've got 2 years worth of time, then we've got a breakout here. We're now starting to what? We're now starting to release the energy. Guess what? We now have what? If it goes vertical, we may have say 6 months out of this. If it doesn't go vertical, we're probably going to have say 1 year of bull market out of this. See how that works with this one here? This is a trade that I got into today, right now. What it looks like right now today, right? And again, my private clients know what it is right now. And no, I can't share this with you in YouTube because, I've got to keep some stuff for my private clients, right? I can't share everything with you. But the whole purpose is, guys, is look for patterns like this, right? Like, don't take my word for it. Look for patterns like this exact thing where it goes sideways, right? For quite some time, and then we get a big breakout bar in the underlying direction of the trend, where it's what? Where we've got what? Trend. High, low, higher, low, higher, low, right? And then we have a sideways period, and then we have a breakout bar. Do your research and tell me what actually happens afterwards in a very short period of time frame. You'll be very, very, very surprised. So anyway, guys, that's it for me today. I'm so excited about these markets. I'm just, oh my goodness, I'm jumping out of my skin right now, and I'm so, so, so excited, and you should be too.